Softbank-backed Arm climbed 25% on its Nasdaq debut, selling about 95.5 million shares. This is the biggest IPO of the year. The chip design company's market cap stood at 68 billion at closing. This is higher than the value of Nvidia. Hormuz is standing by with more on Arm's financials. Blockbuster IPO there, Hormuz.
Absolutely, and as we mentioned the last time also, people were certainly giving an arm and a leg to get those shares, and it indeed lived up to that expectation. It was the biggest IPO of the year, the biggest in 2 years. In fact, it was the biggest listing of the year, and Arm began trading at a 10% premium to its IPO price of $51, but it ended with gains of 25%, and that closing gave it a market cap of $68 billion. Now, at $68 billion, the stock was valued at 110 times price to earnings based on current year profits. Now that is even more expensive than Nvidia, which is valued at 108 times. Now remember, Nvidia shares have already gone up 220% this year, and a caveat here is that this valuation of Nvidia does not include its current quarter guidance, where it said that it expects revenues to grow by 170% year on year. Now, Arm's IPO also resulted in a windfall for Softbank. It took Arm private in 2016 for $32 billion. It sold 10% stake in the IPO, raised close to $5 billion. But the remaining 90% that they have, that went up by $12 billion in value on the first day of trading. Now, Masayoshi Son was on CNBC last evening. He mentioned that he would want to keep that remaining 90% stake for as long as possible. Now, we highlighted earlier that Arm's customers, Apple, Samsung, Nvidia, TSMC, all of them got together and bought shares worth $735 million of Arm. But the IPO now has raised a lot of questions, and those questions come in the form of concerns. And one of the biggest concern is the high valuation, as we highlighted earlier. And the second one stems from that high valuation, because whether it can be justified or not. Now, as of the current quarter, Arm's revenue fell 2.5%, while its net profit had halved from the last year. The third concern comes from China, and that is a big one, because 20 to 25% of Arm's business, which is almost a quarter, comes from China. And such a revenue concentration for any business is problematic, let alone Arm. And the last one, it got hidden in the prospectus pages, but nobody picked that up, and that is RISC-V, or which is also known as Reduced Instruction Set Computing, which is an open source chip architecture. And Arm has said that if that gains prominence, it will impact their business, and their prospectus says, and I quote, if RISC-V related technology continues to be developed and market support for it increases, our customers may choose to utilize this free open source architecture instead of our products. But for now, the stock is in the honeymoon phase. The euphoria is yet to die down. I'll end with the fact that 2/3 of Nasdaq's IPOs have underperformed the market within 3 years of listing. We'll see where Arm goes, but let's now go across to Arm CEO Rene Haas, who told CNBC that artificial intelligence presents a big opportunity for the company. Take a listen.